Welcome back. And the sentiment in the rupee continues to remain muted despite strong performance from the Indian equity markets. The currency shut sharp at 61.93 as investors eye the RBI and the FOMC meeting in the next week. Let's get on board then. Abhishek Goenka, he's founder and CEO, India Forex Advisors. Abhishek, hi, welcome to the show. It has been so many data that the market seem to be reacting to, and the latest one, of course, the RBI committee report yesterday, which did take the rupee and bond yields to much choppy moves. But ahead of the RBI and the FOMC policy now, how are you looking at the currency?
So over the last few days, we are somehow getting the feeling that the rupee has kind of bottomed at around 61.5 levels. You know, the FOMC, I think the way things are, the way the US data is coming in, I think they are going to further taper, and they might just reduce the $10 billion more. RBI policy, I think it's much more priced in the market. I don't think they're going to do much, and whenever they want to do something different, we can never guess. So I think that's kind of priced in the market. So the US dollar should, I think, strengthen from the current levels. And in a month or so, we should see levels of 62.5, 63 levels coming in the market. And the technical chart patterns are also signaling that it's been a long time the consolidation has happened, and now there's a time for a breakout, and possibly it could be on the higher side. So I think I am bullish on the US dollar from the current levels.
How have you read the Urjit committee report? And the feeling in the street is that even in spite or despite that, the RBI could be status quo when we see them in the next week.
That's right. So I feel it's going to be status quo in the next week, and they're going to look for some more data to actually go in for some further action, which is going to be drastic.
Also, what's your sense from the FOMC meeting now? Markets are perhaps anticipating yet another $10 billion of a cut coming in.
So I agree to that. The way the data have been moving, as I said earlier, I feel that the $10 billion worth more of cut in the quantitative easing could happen, and then that could make the US dollar and the dollar index inch higher, and the euro and the GBP to fall low, looking at the current scenario.
Abhishek, also, what's your sense on the interest rate futures? A fourth straight day of that, and we have seen good volumes coming in, and the kind of bond yields reaction that we seem to be getting into the market because of the influx of data and event and numbers as well. How optimistic are you about that product, and are you trading?
No, I am not trading. So I am busy in using foreign exchange markets for my clients. But I feel that this time probably the interest rate markets should pick up, because the mathematics and the mechanism by which they have done this time is, I think, the user friendly, and people will get interested into it, and the volumes, which is again we have seen in the market, I think it should pick up in the interest rate market. Interesting thing that has happened, and of course the 10-year bonds have fallen down, which has reduced the forward premiums in the market, because of which we are seeing significant inflows of debt funds. Close to $3 billion of fund has come into India. Now, though that should have been very, very positive for the rupee, but despite that, the rupee has weakened from 61.5 to 62 levels. So that shows that despite all these numbers and despite all these inflows, the rupee is weakening. So I wish all the very best for the interest rate futures market participants, and I hope this market prospers and a lot of people come and play in the market, and that's going to be good for the market.
Vijay, getting you in the conversation, what's your sense coming in for the currency now? We did do to 62 plus kind of levels during the trade yesterday. Do you see it coming in soon?
I think so, Manisha. I'm bullish on the US dollar. I maintain that the appreciation scope for the rupee is fairly limited, and 61.5, 61.40 kind of levels in the spot segment is a level which should hold where the US dollar bulls are concerned. Once you head towards the 62.80 or even 63 levels, I think the appreciation in the dollar might actually accelerate, ironically, which is because there's a whole lot of short positions built into the USD, which will then start to get squeezed. And the higher the dollar goes, I think the more the traction will be seen on this USDINR pair.
Let's get in one more voice, and as we are looking at various policy changes and reactions into the Indian market, let's also get in a view from Brett King. He's founder and CEO of Morgan Bank, and he joins us for a detailed discussion on banking and regulations as well. Brett, hi, thank you so much for joining us. What's your sense on the banks, first of all? Are they on track for financial inclusion? I mean, that is the word that we seem to be hearing the most on streets nowadays.
Well, I think it's key to understand that financial inclusion is obviously needed in India because we have such a small percentage of the population who are actually banked today. But the conventional wisdom is that we need more branches in rural areas to enable financial inclusion. That's the conventional wisdom, but what we're finding from other developing economies is that's not actually the answer. The answer really is in the mobile phone. You look at economies like Kenya, Uganda, Madagascar, other places like this in Africa, for example, we've seen a dramatic increase in the number of people who are banked through the handset.
Brett, what's your sense on the various regulatory policies, the latest one that the Indian market seem to be facing? While they're changing all the time, but going forward, how optimistic are you about it?
A lot of activity happening in the regulatory space, some good obviously. The move towards the universal electronic bank account tied to the universal ID and biometrics, I think this is a world-class initiative, and if we can stick to the timetable for 2016 for that in India, I think that'll be very progressive.
Brett, I think the tide really turned for the Indian financial markets, or rather the banking, especially after the new RBI governor recently appointed in India. Do you think that will bring about more positive changes? How have you read his recent policies?
I think the regulator is starting to make some positive moves. There's been a lot of action in the last couple of months, more than we've probably seen in the last few years. There is yet still some controversies. We've seen recently some issues around Bitcoin, for example, and other things. There is so much happening globally in respect to disruption, particularly in the payments arena right now, that it is hard for regulators to keep up.
Fair point. So the regulations really seem to be going good. Abhishek, last question to you then. We are looking at good regulation, and as you said, the RBI could keep its status quo. There is some positive data that we have seen coming in the Indian market, ditto in the international markets as well. So given that kind of a background, how are you looking at the interest rates moving, not perhaps in the month of January, but for next 3 to 6 months?
So I think the interest rates in the 10-year I think should be in the range of around 8.4 to 8.6% around. And overall I think not right now, but maybe if the food inflation and the other inflation points which the RBI is talking about, if they're able to control that, then probably we could see some kind of interest rates cuts coming in. But not now. I think it's another 3 to 4 months to go now.
Out for the dollar gains coming in, also no changes in interest rate at least for next 3 to 4 months is the view coming in from our experts. But with that, Abhishek and Vijay, we'll let you go. Thank you so much for joining us on the show. Ditto to you, Brett King. Thank you so much for joining us and giving us your sense on the Indian regulatory aspect. With that, completely out of time on hot commodities. Up next is Rush Hour. Stay tuned.